How's it going, everyone? This video is going to be over the change in stated delivery. We will first go over the PDF to learn what that is before going to the charts and finding some examples. At the end, I will combine it with standard deviations and AMD to create an entry model. So here we are in the PDF, and what is the change in stated delivery? Well, the change in stated delivery is when price goes from bullish to bearish or from bearish to bullish. Now, let's go through this example here. Price is moving up into a higher time frame PD array or important level. This up close candle here gets closed below here, and that is when the change in stated delivery occurs, when the opening price of this up close candle or series of up close candles gets closed below. After being closed below, I can anticipate price to trade lower. Similarly down here, price puts in a swing low, raids the sell stops, and then closes over the series or single down close candle, changing the stated delivery. When price returns, I can anticipate a reaction to trade higher. Now let's take a look at two more examples. Now when there is more than one up close candle or a series of up close candles, I use the opening price of the first candle. So I will look for this price to be closed below, and then when price returns, I can anticipate it to trade lower. Similarly down here, there are 3 down close candles into the important level. I will use the opening price of the first candle as my change in stated delivery. So let's go into the charts and look at a few examples of this. So here we are with our first example, and I'm going to go ahead and mark out our buy side liquidity resting above these old highs. I'm then going to drop down to a 5-minute time frame, and here we are just before New York Open. Let's go ahead and watch and see what happens. So you can see price displaces up over this high and then displaces back into the range. Now I generally prefer a lower time frame sweep with my entry models, but we'll go ahead and mark it out without one. So what I'm looking for here are the series or single up close candle that made the new high before displacing and closing below. Now where would that be? Right here we have 2 candles that made the new high before the displacement down, and I'd want to see a close below here. So you can see price is failing to close below this level. And then now we get a new sweep of a high. So now where would I look for price to change the stated delivery? I'd want to see price close below these series of up close candles here. And you can see price does close below those candles. Now that we have changed the stated delivery from bullish to bearish, I can be looking for price to trade lower. Where is lower? Well, we have London lows resting below right here. So with that idea in mind, I could be looking for price to retest the order block with my stop on the high, targeting these London lows. Now since this is 1.66R and I generally prefer a minimum of 2R, what can I do? Well, I can take what we learned in the previous projection video, project out this manipulation leg, and then look for the -2. So letting this play out, let's see what happens. You can see it tags the order block, respects this fair value gap in here, and now price trades and closes below this candle here, which is now validating it as an order block. And there you go, we hit the -2 to -2.5 standard deviations. So just to review, price goes, sweeps an old high, then displaces down. However, this can't change the stated delivery. We get a lower time frame sweep, which changes the stated delivery, and then we can anticipate price to trade lower to London lows and the standard deviation projection. From here, I look for an entry model to gain entry into the move down. So let's hop into the next example. So in this next example, we are going to work top down from the daily and how you can use the change in stated delivery on multiple different time frames. So you can see here we have a daily fair value gap right here, which would be the draw on liquidity. Here you can see price reaches up into this fair value gap, respects it, and closes down. Using the next day model, we can anticipate price to move lower the next day, taking out previous day low. But let's hop into the hourly chart to confirm this bias. So here we are on the hourly chart, and ideally we want to see a change in the stated delivery after engaging our higher time frame PD array. Well, here is our daily fair value gap or our higher time frame PD array. Do we get a change in the stated delivery after engaging with it? We do, as we displace and close below the series of up-close candles here. Now what else can we do from my latest videos to give us a target for this move down? We can project out this manipulation leg from the high to the low. Then we can look for the -2 to -2.5 area for a target. So let's get into the next day and see what happens. So you can see here we are building a range and we just put in equal lows. Now when we are bearish with price action, a run of an old high is an area to be looking short. So let's hop down to the lower time frames for this 9:30 open. In this case, we'll use the 2-minute. So here we are on the 2-minute chart. Let's go ahead and zoom out so you can see where we're at. We have the old high that was just tagged right there, our equal lows here, and we have a -2 to -2.5 right here. So we'll go ahead and mark that out. Zooming back in, let's see what 9:30 open does. So you can see 9:30 open, manipulated up, closed back in the range. So if I'd want to see this move down, I'd want to see a change in state of delivery or price close below the series of up close candles here. Here we get that close, validating it as a change in state of delivery. So I'd be looking to enter a short position here, my stop on this high. Now what can I do for targets? Well, I can also project off this manipulation leg here, and let's go ahead and zoom back out. Now, ideally, I'm looking for targets in the -2 to -2.5, which we have some equal lows there. We have equal lows, as well as the -4 to -4.5 there, but we also have our hourly target here. I'm going to go ahead and put my target just on these equal lows here, but we'll see how these areas react. So let's go ahead and zoom back in. So here we get tagged in. Pretty choppy, some displacement down. And zooming back out, there we go, and we hit the low. You can see we hit our -2 to -2.5 and our -4. Let's see if we reach for that hourly target. And we do reach for that hourly target. Now let's go back out to the hourly chart just to review this. We went from our higher time frame PD array, which in this case was a daily fair value gap. We waited for the change in state of delivery on the hourly chart, and then the next day we had a sweep of buy side liquidity, which is an area to get short when price is bearish. From here, we look for the change in state of delivery on the 2-minute chart to get short, targeting these equal lows on the hourly chart, as well as the projections from the high of the week. Now that you understand the change in state of delivery, how do I combine all of this into an entry model? Well, what I focus on is a manipulation, then a change in state of delivery, and then I focus on order blocks and fair value gaps to deliver price to projections. So let's go over a few examples of that. So you can see right here we have created a range. Let's see what happens. You can see price is failing to displace out of this range, but that is the first thing, manipulation. The next thing I look for is a change in the state of delivery, so I would need price to close below this last up close candle. So you can see we have not closed below it yet. And there is our close below, so that is our change in state of delivery. Now if I'm looking to take the first entry, I'm looking to enter here at the change of the state of delivery, or when it retests the order block, my stop on the manipulation high, which swept, and then for targets, I like to project out my targets. Now here, I have a low I can be targeting, but I can keep in mind the -2 to -2.5. So ideally, it would look something like this, targeting the -2 standard deviations. We're going to go ahead and just keep it on this low. Now we create more up close candles here and close below them. So now we have more order blocks. So if I was going to miss the first entry, I'd be looking for another entry here. There we make more up close candles. So I'd want to see this continue to support price lower. And another thing I'll do is I'm only going to be looking for entries within a premium of this dealing range here. So above this line here. You can see price is retesting that order block. And there we go, we break that initial low. Let's go ahead and mark out our -2 to -2.5. And now let's see if we can find something in the other direction. So you can see we're building a range. Now, we do reach into the -2 to -2.5 and below these lows. So if this is going to become manipulation, I'd want to see a change in the state of delivery or price close over the series of down close candles here. And price does do that. So the next thing I do is I look to project out this manipulation. I look to our left. What do we have resting in the -2 to -2.5? We have an old high. So that will be my first target. So if I'm looking for the first entry, I'm looking to enter on this change in state of delivery or the order block with my stop on the manipulation, targeting this high. Now what I'm focusing on is a close over this down close candle. So now that it closed over that, it is also a valid order block. So I'm looking for that to support price. And we go reach that high, and let's see how far we go. You can see we consolidate, but we do go end up and hit that -4 standard deviations. So after cleaning up the chart a little, let's go through what I look for one more time. So the first thing is manipulation. So you can see we have manipulation over an old high before change in state of delivery. Once those two things occur, I look to project out this manipulation leg to give myself a confluence or targets. After that occurs, I look for order blocks and fair value gaps to support price lower or higher, in this case lower. And then the same thing on the other side over here, we have manipulation. Once that is confirmed by changing the state of delivery, I can then look for an entry on the order block or fair value gap as price reaches higher to these projection targets and liquidity levels. The last thing we're going to talk about in this video is combining AMD or the box setup with the change in state of delivery or an order block formation. Now I posted on my community tab this post, and so we're going to go over this example. So if you notice right here, we have some sort of range, but let's wait for the manipulation before we identify that. So here we get the manipulation as we have an aggressive move out and then back into a range. So going ahead and marking out this consolidation or accumulation, and we'll also mark out the highest body in that accumulation as that is the box setup, and we'll mark out the deviation from this range or the manipulation. Generally, the box setup is a retest of these previous highs over here, my stop there, and then looking for targets. Well, how can we get targets? We can project out this manipulation leg and look for that. So this would be the normal box setup. However, if I want confirmation, let's see what we would do. So when price comes back up into this area, instead of immediately taking an entry, I'm looking for a formation of an order block or a change in the state of delivery right here. So you can see we have a high here that gets swept. And then where is the series of up close candles that made the high? Right here. And you can see price already closed below the opening price of that, validating it as an order block. So then I can look for an entry here. And then I can decide I can either put my stop here or up here. In this case, I'm comfortable putting my stop here as we had a sweep. And then I can look to target that original projection. So let's see how this works. And there we go. Here we are building a range as we cannot make new highs or lows. So marking out the lowest bodies in that range. Now go ahead and mark out our accumulation, our manipulation. Now we want to see this displaced back into the range, which it does. Now, if I'm looking for a box setup, my original entry would be on a retest of this line here, my stop on this low. However, let's wait for an order block formation there. So you can see we have a down close candle into that area, into the fair value gap. So then I'm looking for a close over this candle. Here we get a close over this candle. So then I will be looking to enter along there. And then I can either put my stop on this low or here. Right here, I would have my stop on this low, and then I can project out this manipulation for a target. And in this case, looking for a previous high here or this fair value gap that lines up with the first standard deviation. So we'll just go here. And there you go. So that is the example from the post, and I hope that makes sense and that it gives you something to study. I hope you found this video helpful. If you did, please consider liking and subscribing. And if you want to see a more in-depth video on that entry model, please let me know in the comments below, and I'll see you guys next week. Have a good one.